Hi guys, Russell Peter here from Ponturo Real Estate. Just do a quick video update. I've got Carlo Ponturo from RAMS Home Loans with me. I'm getting a lot of questions from owners at the moment, so I thought I'd just do a quick update to everybody just to get an understanding of what's happening in the financial market so that you can make the right decisions on your investment properties. Welcome, Carlo.
Hi Russell, thanks for having me.
No problems at all. Hey, so the first question I've got, and I'll try to make this as quick as possible for everybody, is a lot of owners are coming to me at the moment and asking for valuations and getting refinances on their home loans or in their investment loans. Is there any advantages of doing this?
Yeah, we're seeing a lot of movement at the moment with refinances. So a lot of investors that you're probably dealing with, they're looking out at the market and they're seeing, some of those lower interest rates being offered for, assistance for people for the COVID-19 crisis. And they might not be affected themselves, so they're actually taking advantage of those rates and making a move while they are available to them. So look, we're definitely seeing a huge uptake in people refinancing just for that particular reason. There's literally the lowest rates that we've seen essentially in history being advertised at the moment for investors and owner occupiers. So essentially, yeah, if you weren't affected by that, you pretty much should probably take advantage of it at this point while it's still going around for the next 6 to 12 months.
How much have we seen the home loans drop, the rates drop from prior to COVID-19 to now? Like, are we seeing a pretty decent decrease in rates?
Yeah, we are. We're definitely seeing a decrease. So as an example, the average interest only investment rate had a 3 in front of it, 3 months ago. Yep. Nowadays we're seeing the majority of the financial institutions putting a 2 in front of it. So I know that's a pretty broad statement, but we're also seeing fixed loans, even in interest only and principal and interest repayments, coming down below that 3%, and sitting around that anywhere from 2.6 to 2.99 sort of range. Yep. Is where the fixed and the principal and interest repayment loans are sitting for investors. So that's definitely at least 0.5% drop across the board for all investment loans.
Got it. And if you're going to be fixing in for 5 years plus, it's probably a good time to jump onto that and get on top of it.
Yeah, well, fixing's definitely always that that contentious issue as to is it going to be beneficial to me? And each person is going to be different in their sort of needs in that. But all I can say is that I reiterate that the rates are probably the lowest they've ever been. They have been trending down. The RBA can't really cut any further than what it has now, so there's a bit of a debate going on as to whether or not the banks will sort of keep it at the rate that it is now, or they might reduce it further. But all I can say is that for each person looking at a fixed rate, that the rates are very much the lowest they've ever been. So either way, you're probably going to see a good discount on what you've had before. Yep. And just take into account your own circumstance when choosing, and it always is a gamble, but they are definitely very low at the moment, so there's some really good value out there.
Yep, it's definitely worth running the numbers. All right, the next question I've got for you is probably a big one: is tenants stop paying rent? What can we do? Is there any solutions out there?
Yeah, look, we're definitely seeing a lot of assistance for both owner occupiers and investors. So in your particular instance with the investment market, clients can go to their bank if they are suffering from issues that have arisen from COVID-19. For instance, if you've lost your job, if you've got a tenant that's refusing to pay due to the COVID-19 crisis, things of that nature, you can definitely go to your bank and ask them for assistance. Many of the banks now have actually put into place, automated systems where there isn't really an assessment process, rather than you declaring that you've had an issue happen, and they might defer your repayment for say 3 to 6 months is the general gist of it. Yep. Now, there's advantages to that, which obviously in the first instance is that if you're suffering from financial stress, that this might help you in the short term to, help, manage your cash flow a little bit. But really in the long term, your clients just have to remember that you're not getting this for free. The bank's going to calculate the interest that they're giving, a repayment freeze for, and they're going to add it to your loan at the end. And this is the most important point to consider when taking out that assistance package, is that it's not free. You do have to pay the interest at the end of that term. So let's say it's 6 months. Round figures, you're getting $1,000 a month interest. Well, $6,000 is then added to your loan at the end. and your repayments are recalculated over the term that's remaining on your loan. So it might be short-term gain if you are suffering from some stress, but I just want to reiterate that investors shouldn't think of this as a cash flow sort of management tool. It's not. It's to help you if you can't pay. Otherwise, you're going to have to pay it back later.
So from my point of view, it's realistically that an owner continues to pay their mortgage if they can, and if the tenant comes to them and blatantly doesn't pay rent, that probably or needs a help assistance with the rent, and you know the RTA legislation is kind of changing at the moment where we can now defer the rents. We could say, okay, put a hold on your mortgage, but as soon as that rent comes, deferred rent comes in from that tenant, that's when you pay it off, and that's probably the only advantages. Is there any banks putting a complete hold? Is there any banks putting a complete hold on interest repayments?
There are. There's one institute, there was a couple of the big banks that are literally, they're crediting your account with that interest that I was referring to before. So you're not having to actually pay anything for that period of time. But what we're seeing is this is for owner occupiers. So this doesn't cover the investment market, which is more relevant to your clients yet.
Well, that sucks.
Yeah. So investors feeling the pain, and the owner occupiers are getting sort of most of the benefits, and the renters are getting most of the benefits. Unfortunately, the investors are feeling a lot of this pain that isn't filtering through to them. So that's why you got to be really careful as to what you decide. You know, if there is some sort of a deferment, maybe just think about that and what's best for you before you do it.
Got it. Any other fees or anything that's from refinancing that's going to affect owners?
Yeah, sure. Look, there's a couple of points I want to touch on that your clients should probably look out for. Is that one is the biggest question we're getting asked at the moment is, hey, I'm on a fixed rate. There's fixed rates out there that I could refinance to that are 1% cheaper than what I'm getting now. Can you waive the break fees on that fixed loan? And is your bank doing that? There's been a couple of news reports coming out that is happening, but there's the resounding feedback that we're seeing is that they're not doing that. So these fees can range from, in the thousands really. So it can be quite a large cost for refinancing if you are under a fixed rate. And our feedback is that you're not going to be able to get this waived. So that's probably one of the other biggest things that we're seeing. The next thing as well is a lot of investors are always asking us about interest-only extensions. In this particular time, I'd say to your clients to keep an eye out for that. There's been no announcement at this point in time as to if they're going to change the legislation on that, or if they're going to make it easier for you to extend your interest-only term, which is a plan that a lot of investors use. But there'd be something to watch. This might change in the coming weeks, but at this point in time, you can't extend how you used to with just a simple phone call. You do have to go through that assessment process. So that's probably the other biggest question that we keep getting asked. And at this point, no change on that. But yeah, watch this space. It could change in the next couple of weeks, pending some further rulings from our regulatory bodies.
If anything happens there, I'll touch base again and we'll do another update just to confirm what's happening in that area. Anything else you want to touch base with? Anything else we need to discuss that's relevant at the moment?
That's probably pretty much the main questions we're getting asked. And we're happy to answer anyone's queries as to what's been happening around the place in the market. And yeah, feel free to reach out if you need to.
No problems. When I send this on to my owners, I'll put your number and email address so they can touch base directly and have that chat if they want an opinion on what's going on in the market.
That'd be great, Russell.
All right, thanks for your time, Carlo, and I'll talk to you soon.
Thanks so much. Speak soon.
Bye.